Okay, good evening, everyone, and welcome to a session on trading psychology. For those of you that know me, I am the Stradlorian. I'm the in-house options specialist and one-on-one mentoring consultant. So we'll go ahead and get started. I do apologize. There are some issues with the screen share. So if you are watching live, I'm sorry. The Discord update messed up a lot of the settings, and things aren't working the way they should be. However, I am recording this on my end, so you'll be able to watch the session with the screen share later. Okay, so we'll go ahead and get right into it. Not really a super in-depth session, so we're not going to be talking about very many technical things, but it's going to be a little bit of a tough love session because I think when it comes to trading psychology, a lot of traders don't hear what they need to hear as often as they need to hear it. Okay? So, first and foremost, welcome. A little bit about me. For those of you that don't know me, I've been around for a while. I work in the industry. I have a whole bunch of letters after my name that make it seem like I'm a lot smarter than I really am. I just work really hard. If I can do it, you can do it. I have been teaching in a college since about 2010. I'm currently teaching the securities licensing course for future licensed financial advisors. I've taught a whole bunch of other courses over the years. I'm currently pursuing my CFA designation, also pursuing another one called the TEP. My full time job for now is doing high net worth financial planning at a family office for doctors, lawyers, business owners, professional athletes, so on and so forth. Blah, 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 blah. Not really important, okay? What I'm here to talk about tonight is trading psychology. In my opinion, the real holy grail of trading is having that proper mindset. Okay? This is often the last thing that many traders realize needs to be addressed. Too many individuals out there start trading, but they start trading without having the proper mindset. And it's really easy to get yourself into a lot of trouble, especially if you're not prepared for the markets. And so, what I'm here to talk about tonight are some of the most common pitfalls that people run into when it comes to trading. All right. It's really easy to learn a trading system, but applying it will often take effort. All right. If it was really easy to be a successful trader, everybody would be doing it, and everybody would be a millionaire trader. And despite what you see on social media, most people are not millionaire traders. Okay? I'm just going to put it out there. I'm going to be brutally honest. Watch out for people who are posting these huge gains. And I'm not saying that they're false. I'm just saying you really have to keep an eye out for what you're looking for. All right? The ones that are always posting gains tend to be more focused on marketing. I'm a professional in this business. I work with professionals in this business. The real professionals in the trading world focus on risk management first. That is how real professionals approach the market. Okay? If you've been around the markets long enough, if you've been in the trading trenches long enough, you have probably learned how important risk management is. And if you haven't, stay tuned because the market is always out there to take your money. Okay? The market is designed to transfer wealth from those that know how to manage risk and know how to trade, to transfer money to them from the ones that don't know how to manage risk. Okay? You'll often hear, big traders saying, "Hey, yeah, you know what? I'll take your money, sure." Because if you're going to get into a trade that you weren't ready for, and then you wonder why you're losing on your trade or losing in trading in general, it's probably because you're making a few mistakes that can fairly easily be rectified. Now, the challenge is that most people don't really know what they're doing wrong. And so tonight, I'm going to tell you things that you may not want to hear, but you need to hear. Okay? It's going to be a little bit of tough love, but I promise you, if you listen and you heed my words, it can help you in your trading. I have made every single mistake you can imagine as a trader, and I've probably even come up with some new ones. Okay? I've been doing this for a long time. I've seen a lot of things. All right? One of the most important things that I want you guys to focus on going forward is making sure, first and foremost, that before you look up at how much you can make, look down at how much you can lose. All right? But I've got a list here. I'll go through it. Got some talking points. And then at the end, if anybody has any questions, feel free to ask. Don't want to keep you guys for too long. I know today's Father's Day, so happy Father's Day to everybody out there. And let's get right into it. So what are the common issues that traders face? This list here is by no means exhaustive, okay? There's a lot more that we can talk about. Trading psychology is something that we could talk about for hours and hours and hours and hours and hours again, over and over again, and just barely scratch the surface, okay? So what are the most common things that traders face? Maybe they're not consistent with their trading results. Maybe they keep making the same mistakes over and over again. Maybe they're oversizing. Maybe they're overtrading. Maybe they're not cutting their losses quick enough, not letting winners run or reach their targets. Revenge trading, system hopping, smoking the hopium, as I like to say, having unrealistic expectations, not being serious enough about trading, not knowing when to trade and when not to trade, not learning from those who have already been there, and not willing to invest in themselves. Okay? So, not being consistent. Ask yourself if you are getting the results that you are looking for. And if you're not getting the results that you're looking for, you need to ask yourself why. And this is actually a fairly easy one to address. The reason why most traders are not getting the results that they're looking for is simply because they probably don't have a trading plan. And if they do have a trading plan, they're probably not sticking to it. And they're not journaling, and they're not tracking their trades, and they're not reviewing their trades. Every single professional trader that I know, I'm talking about individuals who are trading at an elite level, every single one of them knows exactly where they're getting in, knows exactly where their stop is, what their position size is, what their targets are. If they're trading options, they know what their strike price will be, they know what their contract expiry will be. If they're just trading common stock, they know if they're using margin. If they're using margin, how much margin are they using? All of these things they know in advance. And so if you're not being consistent with your trading results, ask yourself and be very honest with yourself. Are you actually putting in the time and the effort to plan out your trades? Because if you're not, don't be surprised if you're not being consistent. It's quite simple. If you have a repeatable process, you can have predictable outcomes. There is no need to overcomplicate things. And if you want to become more successful as a trader, you do need to put in the time and the effort. And so one reason why traders are not consistent is they're simply just not putting in the effort that's required. Okay? So how do you improve your consistency? It's simple. Track your trades. Review your trades. Journal about your trades. Have an understanding of why your trade worked or didn't work. And ask yourself honestly, are you doing that right now? And if you're not, ask yourself why not. Because I've worked with a lot of traders over the years. I've done it myself, right? The times when I am trading really well, if I go back and I look at my trading journal, Everything is there. My screenshots are there, my entries are there, my exits are there. I've got a journal entry for it. I'm writing about all of the things that are going on. And if I'm not trading well, and I go and I look at my trading journal, guess what? It's not as robust as it should be. Ask around. Ask anybody who's, taken that next step. And they will tell you that once they start reviewing their trades and journaling their trades, that their results start to improve. Because what you measure, you can improve upon. If you don't know what you're doing wrong, how are you possibly going to fix it? Okay? Which leads me to my next point. Making the same mistakes over and over again. Again, this boils back to the last point. If you don't have a proper trading plan for every single trade that you're taking, ask yourself why. It doesn't have to be complicated. You don't need to print out your charts and mark them up by hand. You can if you want. But if you're making the same mistakes over and over again, how are you going to know what needs to be corrected if you are not tracking and journaling and reviewing your trades? It's really just that simple. I'm here to tell you that, and don't get me wrong, trading is never easy, okay? It is never easy. Sometimes things work out the way they're supposed to, other times things don't. But if you put in the time and the effort, and you really focus on doing the same things over and over and over again, consistently, doing the right things over and over again, consistently, your trading results can improve. So if you're making the same mistakes over and over again, first of all, you need to identify those mistakes. How are you going to identify those mistakes? By tracking your trades, reviewing your trades, journaling, asking yourself, am I actually putting in the time and the effort that's necessary? Because if you're making the same mistakes over and over again, guess what? Unless you do something to fix those mistakes, you're probably still going to make them. And so one of the big parts of trading is learning how to get yourself out of your own way. Everybody loves the freedom that trading provides us. But with that freedom comes responsibility to ourselves. Because if we are not responsible to ourselves, and we don't have rules and we don't have a system in place, guess what's going to happen? If you don't have rules, everything you do is a mistake. It's a direct quote from the late, great Dr. Van Tharp. So you have to have rules in place. And if you have rules in place, that is going to help you to prevent yourself from making the same mistakes over and over again. So next, we have oversizing. Oversizing is directly related to two things. The first is thinking that you know more than the market and not believing that your trade can be a loser. So what do I mean by, thinking you know more than the market? Well, when you size up, especially when you take on an irresponsible position size, what are you actually doing? You're taking on excessive risk because you think or you believe that you know what the market is going to do next. For those of you that have read anything by Mark Douglas, he will tell you, one of his rules or one of his, famous things is anything can happen. And so when you're oversizing, what are you doing? You are putting yourself in a position to make a very costly mistake. Now, sure, there are times when you can size up a little bit, but if you're on a regular basis oversizing, with shares, it could just be buying too many shares or buying on margin when you shouldn't be. With options, it could just be buying, too many contracts. You're not managing risk. Now, sure, there are going to be times when it makes sense to take on a slightly larger position size, but you should never be putting yourself in a position where if you make a mistake, that mistake blows up your account. Okay? Over position sizing is one of the biggest mistakes that traders make, especially retail traders. Because when you work for an institution, there are risk parameters in place. So if you manage, $1 billion portfolio and you try and put $500 million into one position, A, the system won't let you do it, and B, they're probably going to walk you out. As in, you're probably going to be fired on the spot because you're never going to be able to put on that kind of risk. So, why do we as retail traders make those types of mistakes? Why do we feel that we are certain of the outcome? Because if we feel that we're certain about the outcome of our trades, that is what leads us to over position size. It's like when you think, yeah, you know what? I know what the market's going to do next. Nobody knows what the market's going to do next. If we knew what the market was going to do next, then of course we would be beyond wealthy. So the first and foremost thing that you always need to do is to make sure that you are managing your risk. So if you're over position sizing, that's something that you need to stop doing ASAP. Know when to scale up, know when to scale down. And in future sessions, if we have another session, I'll go into a lot more detail into each one of these things and give you tips on, what to do, how to prevent yourself from, doing the things that you're not supposed to do. Because with trading, there's having to do things right, but also there's having to stop doing things that are detrimental to you. And, if you ask yourself honestly, if you stopped making the biggest mistake you're making right now, how much would your trading improve? Ask yourself, if you could eliminate your worst trade of the year, how much better would your trading results look? So when it comes to oversizing, don't let your ego get in the way. Sure, we might have an indication of where price might be going based on our analysis, based on the data that the market is presenting to us. But unless you're trading on insider information, and even then it's never 100%, it doesn't make sense to overposition size. Because oversizing is often when, look at it this way. When do traders start overposition sizing? It's usually when they've had a winning streak, right? You win 2, 3, 4, 5, 6, 10 trades in a row, maybe. Maybe your account has grown significantly. And then, because you've had some success, you start to believe that you can size up, and that's fine. But what happens most of the time? It's often when you take on your biggest position that the market turns against you and reminds you who's actually in charge, because we never know what's going to happen in the markets. I know it's happened to me. I know it's happened to a lot of other professional traders that I talk to. It's like, yeah, you know what? I was doing really well. I grew my account X amount, or I made X amount of dollars. And then I put on a big trade. And that's usually when the market says, oh yeah, let me remind you. So be very careful when it comes to position sizing. Never put yourself in a position where you can do irreparable damage to not only your account, but to yourself. Back during the tech wreck, so we're talking late 99, 2000, that time, right? I personally know somebody who lost their house because they were trading on margin and the market collapsed. They were over leveraged. They had too much size on. Now, they had gone from a very small amount to almost $1 million in a very short period of time. It was like less than a year. But that was the type of market, you add, shoelaces.com would go up 600% in a day. It was ridiculous. And so, easy come, easy go. But this individual had put themselves in a very bad situation. And unfortunately, they ended up losing their house. This is somebody that I know personally. Okay. If you're trading futures, especially if you're trading Forex, if you're selling options, all of these things, you are really just one big mistake away from completely destroying your account. So be very careful, especially when it comes to position sizing. Over trading. How many times do you look back at the end of the day and think that you took too many trades? It's very, very, very common for new traders to want to trade as often as they can. I'm at the point now where, I've been trading for so long that if I could take one good trade a month, I would be happy. A couple of good trades a week, I would be happy. If you want to trade on the 2-minute chart, the 1-minute chart, the 5-minute chart, power to you if it's working for you. But many times when I start consulting with traders, one of the biggest things that we identify is that they're over trading. Now, over trading comes from wanting action. So part of it is people become addicted to trading. They're treating it as if it's a casino and not, a place of business. And it's all about the action, right? You want to trade. I need to put a trade on. I need to put a trade on. If you're waking up, in the middle of the night, wondering about your positions, wanting to put a trade on, then there are some underlying issues there that need to be addressed. But one of the biggest mistakes that I find that traders are making is they are putting on too many trades. The best traders that I know are trading the higher time frames. Monthly charts, weekly charts, daily charts. I'm not saying that it's not possible to be successful trading on a 5-minute chart. What I'm saying is that the most successful traders that I know are trading the higher time frames. And when you're trading the higher time frames, it's difficult to be putting on too many trades, because if you're trading on a daily signal, how many times are you going to be getting in and out of a trade if you're only following, say, a few tickers? Now, don't get me wrong. It is very possible to be scalping on a 5-minute chart, a 3-minute chart, shorter time frames. If you're trading futures, you can do really well finding, a couple of good trades. But you have to be careful, because if you find yourself trading too often and you're not, if the effort that you're putting in is not the results, let me try. There we go. Sorry about that. If you are, ask yourself this, is the juice worth the squeeze? Right? Because if you're putting on too many trades and at the end of the day you find yourself getting frustrated, maybe you're not making the money that you thought you should be making, you're paying too much in commissions, you just end up expending too much of your mental capital as well as your, financial capital, then maybe overtrading is a problem that you need to address. How do you know if you're overtrading? Look at your trading results. Look at your trading journal. Look at your statements. If you're putting on 50 trades a day, there might be a problem. Now, if you're getting spectacular results by putting on 50 trades a day, then by all means, please continue to do so. But oftentimes you'll find that the less you trade, the higher probability setups you take, the higher quality setups you take, the better results you're going to get. Something that one of my mentors taught me was that trade smaller, trade better. Trade less, make more money. So if you can pick one really, really high quality, high probability setup, then focus on those. Because the shorter time frames, when you're trading on them, you can find yourself getting stopped out often. And there's nothing wrong with that. If you have a good win rate, if you have, proper risk to reward, you can do well. I'm just saying that if you find yourself struggling with your trading results, then maybe look at trading less. Look at trading higher time frames. If it's working for you on the 1 minute time frame, 5 minute time frame, by all means, please continue to do so. The people I'm talking to here are the ones who are struggling, and oftentimes it is over trading. Okay? Not cutting losses fast enough. This is a big one. Okay? This is probably one of the biggest mistakes that traders make. And this comes from believing that your trade is going to come back. And it's tied into, the hopium that I was talking about, which we'll get to in a couple of slides. But by not cutting your losses fast enough, you are not protecting your capital. First and foremost, our responsibility as traders is to protect our capital and then make money. Because if you are not protecting your capital, I can guarantee you this, over time, you are just going to be 1 or 2 losses away from blowing up your account. Especially if you are oversizing and over trading. Okay? But you need to determine what your stop losses are from the very beginning. If you're not cutting your losses fast enough, that is a challenge that you need to overcome. And it's quite simple, right? There's always a price that says that you're wrong, right? That's something that one of my mentors told me. So if the chart is telling you that you're wrong and something has changed, there's no reason for you to still be in that trade, right? I'll give you guys a quote from Rob Smith, right? For those of you that trade the strat, you know who Rob Smith is, right? He's the creator of the strat. And he basically says this. He's like, look, holding on to a losing trade is like being on a bus that's going in the wrong direction. And you're staying on that bus, hoping that that bus is going to turn around and go in the right direction. Now, wouldn't it make more sense to get off of that bus that's going in the wrong direction and get on a bus that's going in the right direction? Well, it's the same thing with your trades, right? If you're letting your trades just continue to go against you, and you're not cutting your losses fast enough, you are going to grind up your account until there is nothing left. And if you've been through this, you know, especially if you're trading options, okay? If you're trading options and you don't cut that loss when you're supposed to, you can end up losing your entire investment. Because options, we know, you have to be right in terms of not only in terms of direction, but also distance and time. And so once time decay gets a hold of your options and it doesn't make the move that you're looking for it to make, even if it does make a move later, you can still end up being right, but still end up losing money. So cutting your losses fast enough is one of the most important things that you need to do. And so one of the ways that I manage that, because I'm in a unique situation that I can't actually have a stop loss on my options contracts. So I position size in such a way that if that trade goes to 0, I'm okay with it. But for you, if you can put in a physical stop loss into the system, then I suggest that you do that. Mental stops don't always work. And so if you are keeping a mental stop, you're going to want to revisit that. Protect your capital, especially for those of you that are paying almost nothing in commissions. I pay $9.95 a trade plus $1.25 excuse me, a contract. So paying $9.95 a trade plus $1.25 a contract is very costly, right? So if you're paying 55 cents to get into a trade and another 55 cents to get out, there's no reason why you shouldn't be cutting your trades, religiously. Your primary goal as a trader is to protect your capital first and foremost. So if you're not cutting your trades, you're leaving yourself open for the market to continue to take more money from you. The best traders I know are the best risk managers, right? Fine. You lose 5%, it's not a big deal. You only need to make 5.5% to recover. You lose 10%, you need to make 11% to recover. You lose 20%, you need to make 25% to recover. You lose 50%, you need to make 100% just to get back to break even. Think about that. So ask yourself where it makes sense that your trade is wrong and cut it. Manage your position size, manage your risk. If you want to be successful as a trader, these are the things that you need to pay attention to. Every single successful trader, every single successful trader that I know is an expert risk manager. Forget looking up. Yeah, sure, you can make 100%, 1,000%, 10,000%, 20,000%. But if you're not protecting that downside, you won't be in the market long enough to have those winning trades. Sure, sometimes it stops you out. You can get right back in. There's nothing saying that you can't re-enter a trade after you've been stopped out if the trade sets up again. But if you're holding on to a trade, hoping that it's going to recover, most of the time it doesn't. And that's something that you really need to pay attention to. Manage your risk. Okay? Next, not letting your winners reach their target or letting them run. This is a challenge, okay? This is something that is not easy to fix, and it's something that everybody struggles with, okay? Doesn't matter how long you've been trading, there's always going to be that trade that you exit, and then it continues to run. It happened to me with Mara, back in April. It was a fantastic trade. I made a decent amount of money, but I could have made double or triple had I held on even just for another 3 days. But it had reached my target. It was a 5 out of 5 trade when I went to go review it. But what do we do about letting our trades run? Why do we not let our trades get to their target? A lot of it has to do with fear. Now, why would you be afraid if you're in a trade? Oftentimes it's because you probably have too much size on. So trade at a level that is comfortable for you. Trade at a level that lets you sleep at night. If you're waking up at 2 o'clock in the morning to check on what the futures markets are doing or check what, Tesla is doing on the German exchange, you might have too much size on, okay? So how do you manage this? How do you let your winners reach their target? The way I do it, especially if I'm trading something like futures, I'll put my entry, right? I'll put my stop, and I'll put my target. And then oftentimes I'll even shut the window down, or I'll walk away from the screen. And I will just let the trade do what it needs to do. Micromanaging your trades is not beneficial. And you'll hear people say, oh, well, you can't go broke taking a profit. That's not entirely true. Because if you're losing more than you're winning, yes, you can go broke taking a profit, especially if your winners are not outpacing your losers. So what do you do about letting your winners reach their targets? You can use conditional orders. You can, set alerts for yourself. Or you can scale out of positions. You can scale into positions. You can scale out of positions. Figure out what works best for you and your personality and your trading style in the amount of time that you can devote to being in front of the screens. I have found for myself personally, the easiest and the best way is to just put my order in. I'll have my target, so I'll have an alert. I'll have my stop, I'll have an alert, and then I go on doing something else. Because I promise you, if you are trading on a daily chart, watching the 5-minute chart is not going to do anything beneficial for you. And in fact, I can almost guarantee that if you're trading a daily setup and watching the 5-minute chart, you're going to get shaken out of your position. Because you could see 3, 4, 5, 6 red candles in a row on a 5-minute chart and think, oh my God, it's the end of the world, I need to cut this trade. When on a daily chart, it almost doesn't register. So, if you are trading on a daily chart, you have no business watching it on a 5-minute chart. You're not doing yourself any favors. So, how do you let your winners run and reach their target? Get yourself out of your own way. If you can put in bracket orders, then use them. Make it as easy for yourself to win as possible. It doesn't have to be fancy. You don't need to have, complex algorithms. You don't need to have all of these bells and whistles. If you know where your target is, then set your sell order there. If you know where your stop is, have your stop already in place. And then don't move your stop. The only time you should move your stop is to move your stop higher. Never increase the amount of risk that you're taking on. And if you're adding to a position, make sure that you have a proper stop in place, because if you're buying at a higher point, it doesn't make sense to have your stop where your original stop was. So you need to manage that add-on as if it's a new trade. So what do you need to do? Know where you're getting in. Look for your low risk, high probability entries where you can have good risk to reward, and then let the market do what it's going to do. The best trades that I have put on are the ones that I, patiently wait for, build my position, and then just walk away. If it doesn't hit my stop and it doesn't hit my target, what is watching it going to do for me? I can't control the market with my mind. Nobody can. The market doesn't even know you exist. Right? I literally have a piece of paper beside me here at my trading station that says the market doesn't give a damn what you think. So me sitting there watching the market is not doing anything for my position except increasing the odds of me making a trading error. And so if I stop out of my position because I was watching a 5-minute chart when the daily chart setup was still absolutely valid, that's a trading error. So as much as you can, let your winner run. Know how you're going to trail your stop. If you're up 100% on your trade, then you should at a minimum be moving your stop to break even or taking off half or keeping it, plus 25, plus 50, whatever you decide. But if you're up 100% on the trade and then it goes back to break even and you haven't protected your capital, remember, your goal is to protect your capital first. So let your trade run, but manage your risk. So if you're up 100%, there's nothing wrong with taking off half. But know what you're doing before you get into your trade. If you can automate it, it's probably the best thing to do, because then you're getting yourself out of your own way. Enter your trades, go do something else. Trust me, they've done the studies. Watching your trade on a 5-minute chart is not going to help you reach your profit target. Okay? So keep that in mind. So next, revenge trading. If you haven't revenge traded, you probably haven't been trading very long. We all have that one ticker, or maybe more than one ticker, that we just absolutely have it out for, or we think that that ticker has it out for us. And so how do we prevent ourselves from revenge trading? When you lose money in the market, it hurts, I know. And eventually, if you keep taking losses, significant losses, you can develop trader PTSD, right? There are people who I try and coach, but they've just been so damaged by the market that they're actually paralyzed with fear when they're trying to enter trades or when they're trying to hold on to trades. They'll get into a trade and then they'll cut their trade right away. They might be up 5%. And they're still in the buy zone, but they're exiting their trade. Or you lost some money. So what do? You put on a bigger position size to try and trade it back, try and make that money back. That's the wrong approach to have. Revenge trading, there's an old saying that when you seek revenge, dig two graves, right? One for yourself and one for the person that you're seeking revenge on. Don't mean to be morbid or anything, but it's the same thing that applies with the market. If you're trying to seek out revenge on the market, it's really your own grave that you're digging. Because revenge trading, especially against the market, you're not going to win. It's like your boat capsizes in the ocean and you think that you're going to take revenge on the ocean. It's not going to happen. So how do you prevent yourself from revenge trading? One of the best things to do, and I think that traders don't do this often enough, but one of the best things that they need to do is take a break from trading. Guess what? The market's going to be there tomorrow, and the day after, and the day after. I've been in the market for many years. And the only time that I ever remember the market being closed was after 9/11, right? Rightfully so. And the market was closed for, I think, 5 or 6 days. But then the market reopened. So barring some, incredible catastrophe, the market's going to be there. Through everything that has happened since the 1870s when the markets were founded in the US, the market has always reopened. Okay? So don't think that by not trading one day, you're missing out on anything. By not taking that next trade, you're not missing out on anything. You have to learn to preserve your mental capital as much as your financial capital. And if you're at a point or in a spot where you are now trying to seek out revenge against the market, the best thing to do is go to cash and let the dust settle. Right? A moment of anger can lead to 1,000 moments of regret. Especially when you start trying to size up to get back that money that you just lost. That money's gone. You took a loss on a trade, that money's gone. Trying to trade that same ticker again to make that money back, usually not a good idea. If there's a valid setup, sure, take it, no problem. But are you trading the setup or are you trading the ticker? Or are you trading your emotion? This is what you have to ask yourself. So if you are at the point where you are now looking to seek revenge on the market, walk away. Knowing when to trade and when not to trade is very important. Okay, so if you're looking to revenge trade, don't. Go to cash, take some time away from the markets, review your trades, figure out what was going wrong, because you're not revenge trading when you're trading well. You're revenge trading when you're trading poorly. And that is the worst time to be trying to take on new trades. System hopping. A lot of traders out there like to system hop. What do I mean by system hopping? Well, you learned regular technical analysis and it didn't work for you. So then you went to go learn some other system. Maybe you tried to learn the strat. Didn't work for you. Then you tried to learn ICT. That didn't work for you. Then you try and go and learn something else. That didn't work for you. Here's the brutal, honest truth. The problem is not the system. The problem is us as the trader. Because a good trader can pick up a new system and trade it profitably. But you can give a bad trader the best trading system in the world, and they will still manage to screw up. So if you find yourself hopping from system to system, ask yourself if you have honestly put in enough effort into those trades and that you were actually following the system and that you were tracking your trades and you were reviewing your trades and you were journaling to know that you were actually following the system. And then at that point, if it doesn't work after 50, 100, 500, 1,000 trades, then you can maybe say, okay, the system sucks. But if you have an edge that you can exploit in the market and you have good risk management, even if your system sucks, you can still come out ahead if you manage risk. So just because a system is not working for you doesn't mean that the system doesn't work. A really good trader with really good risk management can take a mediocre trading system and be profitable. But I need to address another thing. If you are trading a system that does not fit your personality type, your time horizon, if you can't, if you're not trading a system that works for you and the time that you can put into the markets, then that system's probably not for you. You need to find something that works. The only way to find out what works is to actually put in the time and the effort, right? If you know that you can't be there throughout the day, then don't try and day trade. If you know that you can only check the charts at night and, you work somewhere where you don't have access to your trading platform or you can't trade from your phone or you can't, be watching what's going on in the markets, then maybe you need to trade on a higher time frame. Maybe you need to decide whether trading options or futures or forex is the right thing for you. Maybe you need to just pick a different time frame or trade a different setup. But hopping from system to system to system to system just because you haven't been able to make money with it, 9 out of 10 times it's because the trader hasn't been doing what they were supposed to. It's like you have a recipe, right? You get a box of instant cake mix and you don't follow the directions. And then you say that the cake didn't turn out the way that it was supposed to, but you didn't follow the instructions. You didn't put in the right ingredients. Is that the manufacturer's fault? Or is that the person who's making the cake's fault? One of the biggest things when it comes to trading is holding yourself accountable. I'll be brutally honest. A lot of traders lie to themselves. I know because I used to do it to myself once upon a time. We all have at some point. I'm here to tell you that it's not the market's fault. The market didn't put that trade on. You put that trade on. Now, unless somebody hacked into your account and put the trade on for you, if you put the trade on yourself, you need to hold yourself accountable. And so one of the things that I work on when I do my consultations is, helping the trader hold themselves responsible. Because if you want to take credit for the winning trades, you need to accept responsibility for those losing trades. And so if you're doing things that you're not supposed to be doing, ask yourself why. And if you're hopping from system to system to system to system, ask yourself why. Go back and review those trades for that particular system. Because chances are, if you were trading a system and you decided that that system wasn't for you, if I ask you and I tell you, hey, send me your screenshots from when you were trading that system, I'm willing to wager that you probably don't have them. I know, because I do a lot of consultations. And in the beginning, one of the biggest challenges that traders have is learning to accept responsibility for themselves. And one of the reasons why it's difficult is because we don't want to accept that we lost on a trade. We don't want to accept that our trade was wrong, our thesis was wrong. Being wrong on a trade doesn't mean anything. It just means that your trade didn't work. That's it. It doesn't mean that you're a loser in life. It doesn't mean that, you're not worthy of anything. It just means that your trade didn't work. Once you get to that acceptance that you're going to lose money on trades, then things start to shift. But if you have to hop from system to system to system to system, I'm here to tell you it's probably not the system. If other people are trading that system successfully, then maybe it's not the system that's the issue. But maybe you need to figure out why that system wasn't working for you. Now, if it's a day trading system and you can't day trade, okay, find a new system. But ask yourself if you actually put in the necessary effort to get that system to work for you. Okay? Hopium and unrealistic expectations. We've all smoked from the hopium pipe when we're trading in the markets, right? And having unrealistic expectations has been the downfall of many traders. Now, I'm going to give an example. It might hurt your feelings. If it does, I apologize. It's not my intention to hurt your feelings. But let's look at AMC and GME, okay? Because it's been 2 years. And people are still hodling onto AMC thinking that it's going to, $1,000 a share. And I'm here to tell you that it's probably not going to happen. I'd have to check the tweets. I don't know if it was 1,000 or if it was $10,000 a share. I think it was $1,000 a share. If AMC was to go to $1,000 a share, its market cap would be bigger than the entire S&P 500. Or it might be 10,000. I'd have to check, but something ridiculous. Okay. So if you are in a trade and you've been holding a stock for a really, 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 really long time, and your belief in it is so high that you can't see things rationally, there's a problem. If you're getting into an options trade thinking that you're going to make 10,000% on that trade, your expectations are not realistic. Okay? Basic math is not difficult. Anybody who can open a trading account should be able to do basic math. And so I'm here to tell you that when you see these absurd returns on social media, be very careful. Now, I'm not denying that people made a ridiculous amount of money off of, Nvidia earnings or Netflix earnings when they crashed or Facebook earnings when they crashed. But if you were buying an options contract that was 20% out of the money and holding it through earnings, I'm willing to wager that that wasn't an educated decision, that was a lotto ticket. Okay? Now, I'm not hating on them. I'm really happy for the people that won on those trades. I just hope that they have the discipline and the foresight to actually be able to keep that money. Because I know with discipline you can make money. But making money without discipline only means that you're not going to keep that money for very long. A great example is professional athletes. They say 95% of professional athletes are broke within 5 years of leaving professional sports. Why is that? Why do most traders lose money? The stats don't lie, right? 5% of traders, if that, are successful. Which means that 95 out of 100 are not. So when you see these huge returns posted on social media, do you know that they're real? Because a lot of it is marketing, a lot of it is paper trading, a lot of it is photoshopped. It's very easy to have 20 different accounts, put on a bunch of YOLO trades in a dummy account, and then just point out the winner. So watch out. Be realistic. Because if you start off with $1,000 at the beginning of the year and you make 1% a day, you can grow your account to 10,000 within 6 months. I can show you the numbers. And I can tell you that if you are trying to put on those types of trades where you are growing your account very aggressively, if you're not managing your risk, you're just going to blow up your account. All of those, $1,000 trades, $500, challenges, they're not managing risk. It's not easy to grow an account from $500 to $5,000. I'm not saying it's not possible. I'm saying it's not easy because you're usually having to put on more risk than you should be. So be realistic with your expectations. If you can make 10% a month, you are doing fantastic as a trader, especially when you start looking at larger and larger amounts, right? Any person who says that they're making 10% a day isn't really telling you the truth, okay? With 10% a day, in 25 days, you would be at 10,000. In 49 days, you would be at 100,000. In 73 days, you'd be at 1 million. In 97 days, you'd be at 10 million. And in 121 days, you'd be at 100 million. So if somebody says that they're making 10% a day, if they started with $1,000 at the beginning of the year, making 10% on their account every single day, then halfway through the year, they would be at 100 million. If you're talking about just 1% per day, you would go from $1,000 to $100,000 in 463 days at 1% per day. So be realistic with your expectations. Don't think that you need to make 100, 200, 500, 1,000% on your trades. If you can compound, and if you're making 10% a trade and you can compound that and grow your account, you would be surprised at how big and how fast your account can grow. But it takes time. We know how compounding works, right? You look at Warren Buffett. Warren Buffett made 90% or more of his wealth after his 50th birthday. But it was all compounding. So when you start compounding, especially when you see these ridiculous things like, I can make 500% in an hour trading SPX 0DTE. 500% in an hour, sure, you might do it once. You might do it twice. But if you could do that consistently, you would be the richest person in the world by this time next week. The numbers don't lie. It's basic math. Okay? So if you can grow your account, don't think that 20% is not a lot. If you can make 20% especially if you're trading options and you can lever using options, 20% grows your account very quickly. But you have to manage your risk. So don't be smoking the hopium. Don't think that, something's going to continue to go up forever or go down forever. There will be corrections along the way. We might be entering into a new bull market. Or this just might be another bear market rally. Who knows? A lot of the indications are that this might be the start of a bull market. Does it matter? No. Trade your setup. If you have a setup that says that you should go long and the market is trending higher, the probabilities are in your favor. Trading with the trend is very important, but you have to set realistic expectations for yourself. Don't think. I'll give you an example. I had a one-on-one student who had $1,000 in their account, and they wanted to day trade for a living. I had to tell them, look, that's not realistic, especially if you have to draw money from the account. Even if you've got a $10,000 account, it's not realistic that you are going to be able to day trade and survive over an extended period of time with a $10,000 account. It's just not. Because over 1,000 trades, which is how we need to be thinking. Don't think about, hey, this next trade is going to make me rich. It's probably not. But over 1,000 trades, it is almost a statistical certainty that you will have a losing streak of 5 or 10, 5 to 10 to even 15 losing trades in a row. It happens to professionals who can have 5, 10, 15, 20 trades and losing trades in a row. So why do we think that as retail traders who are against the best and the brightest with multi-million-dollar machines and CFAs and PhDs and CMTs, that we're not going to face those same things? We have to be realistic. We have to be real with each other and with our trading and with our expectations of trading. Okay? So don't smoke the hopium. Have realistic expectations. If you can grow your account even at 5% a month, you are a world-class trader. If you can do it consistently. The whole thing is consistency. If you make 10,000% in 1 month and then lose it all the next month, there's no consistency there. Okay? Not being serious enough. I'm going to drop the hammer here. Okay? If you are not willing to put in the effort, you are not going to make it as a trader. I'm being totally, brutally honest. If you're not serious enough, if you treat it like a hobby, it's going to pay you like a hobby. And most of our hobbies cost us money. But if you treat it like a business, it can pay you like a business. But you cannot be upset by the results you didn't get for the work that you didn't do. It's really just that simple. So if you're not willing to put in the time and the effort, that doesn't mean sit there clicking buttons all day in front of the screen during the market hours. That means planning your trades, taking your screenshots to know when you got in, right? Freeze that moment in time. Why am I getting into this trade? Tracking your trades, reviewing your trades. So have a screenshot for when you get into a trade, have a screenshot for when you get out of a trade. Put in that work, because if you're not serious enough, you're not going to make it. Anybody can be a successful trader. Everybody won't be a successful trader. But you have to put in the time and the effort. How long does it take to become a doctor or a lawyer or even a plumber or a mechanic to get a mechanic's license? How long does it take to become a general in the army? You have to put in the time and the effort. It's like me wanting to take one swimming lesson and they teach me how to tread water, and now all of a sudden I think I can swim the English Channel. Right? It's like, I buy a BB gun from Walmart and all of a sudden I think I'm a Navy SEAL. So why do we think that watching a few YouTube videos is going to make us a professional trader? You have to put in the time. You have to put in the effort. There's no shortcut to success. And trading is one of those businesses where you are just one big mistake away from ruining everything. Trading futures, don't have a stop loss. Holding through, some economic event, yeah, you can get yourself into a lot of hot water. I'll tell you guys a true story. I was trading during the financial crisis. I was short the Dow E-mini. Okay, the market was tanking. I was making money. And guess what happened? They announced the bailout package. Do you know what happened? The market turned on a dime and ripped higher. And to this day, I am so thankful that Options Express, who I had my account with, had a stringent risk department, and they took me out of my trade before some major damage was done. Put it this way. Had it not been for the risk department, now, don't get me wrong, I had no idea that they were announcing the bailout package during the financial crisis. And had I been on the right side of that trade, I would have made a ridiculous amount of money. I was on the wrong side of that trade, and it was only because of risk management that I didn't lose everything. This is a true story. This happened to me. I remember calling my dad, still literally shaking, and telling him, like, I'm screwed. Now, I was fortunate that they liquidated my account, so they basically stopped me out with my account value at pretty much zero. But it could have been way worse. So you always need to be prepared. And if you're not serious enough about this business and you're not willing to put in the time and the effort, you're probably not going to make it as a trader. If this is just a hobby for you, fine. If this is something that you actually want to do to make money, to improve your lives and the lives of the people around you, your family, your community, donate to charities, do good things in the world, money can help you do that. But you have to treat this seriously. You don't become a doctor overnight. You don't become a lawyer overnight. You don't become a dentist overnight. So don't think that you're going to be a successful, disciplined, profitable trader overnight. Because even if you do well in the beginning, there's going to come a time where you're going to take some hits. It happens to every single person who enters into this arena. So ask yourself, how badly do you want it? Because if you don't want it bad enough, you're probably not going to get it. If you're just looking for the markets to, give you money, it doesn't work that way. You have to put in the effort. And you know yourself if you want it bad enough. Because if you do, you will find a way. If you don't, you will find an excuse. So knowing when to trade and when not to trade. This is also very important. If you're in the right frame of mind, things are going well, you have stability, the market conditions are favorable to your trading style and to your temperament, and that's probably a good time to trade. I can tell you this, there have been times in my life where I should not have been trading. Unfortunately, I didn't have somebody telling me, you know what, you should probably take a break. And I know, because when you're going through stuff, it could be health, it could be family, it could be, maybe you're going through a divorce, maybe, something's happening. Think about life. Life happens, right? And if you don't know when you shouldn't be trading, especially if you're going through stuff in your life, I'm here to tell you that trading is not going to solve those problems. In fact, it's probably only going to make those problems worse. Money solves money problems. Now, if you've got money problems and you're trading to trade your way out of money problems, then there could be an issue with that as well, because now you're trading from a desperation standpoint instead of trading when you're level-headed and clear-minded and calm and focused. So if you've got stuff going on in your life, please take a break from trading. The markets are not the place to seek refuge from problems in your life. It's going to make things worse. I know, I've been there. So if things are going well, the market conditions are great, things are going okay for you, then trade. If you're having trouble with your health or with your family or with, kids, or you're going through drama in life and, you're not sleeping, anything like that, take a break. The market's going to be there. Focus on yourself. Fix yourself up first, then come back to the market. The market's an ocean. It's never going to run out of fish. But if you drown while trying to catch a fish, then what good is that? So if things are not going well for you, don't trade. Because trading is not going to make those things better. Fix the problem, get healthy, resolve whatever issues they are. If it needs time, take the time. There's nothing wrong with taking a break from trading. But let me be the one to tell you that if you're messed up, don't trade. Okay? Not learning from others. Like I said at the beginning, I have made every single mistake you can imagine, and I've probably come up with some new ones. Learn from the mistakes that other people have made, especially the people who have made those mistakes and are cautioning you about it, right? When you're younger, your parents tell you, don't touch the stove, it's hot. Well, if you listened, you didn't touch the stove. But if you decided that you wanted to find out for yourself and you touched the stove, how many times did you have to keep touching the stove before you got the message? So when traders who have been doing this for a very long time are telling you, manage your risk, be careful, don't be overly aggressive, don't over position size, don't touch the hot stove, it's better to learn from other people's mistakes than from your own mistakes, because you do not have to make those mistakes. You don't. There is nowhere that it is written in the trading gospels that says that you have to make every mistake for yourself. Maybe you had a sibling and you told them, hey, touch the stove. Well, if they burnt their hands, isn't that enough for you? Do you need to burn your hand as well? You don't. You don't have to make the mistakes that other people have made. Learn from those mistakes. Now, some things you're going to have to learn the hard way, but you don't have to. I'm here to tell you that there is an easier way. You don't have to blow up your account. It's not necessarily a rite of passage. If you learn the right things, maybe you never have to blow up an account. But I'm here to tell you guys and gals the things that I didn't know when I was learning. And by the time somebody told me, I had already made all of those mistakes. So I'm here to tell you, learn from the mistakes of others. Learn from the things that they're doing successfully, and learn from the mistakes that they've made. It will make your trading journey easier. It doesn't have to be a difficult journey if you learn, right? You think about the pioneers. They had to cut trees. They had to clear paths. They encountered wilderness. They encountered all sorts of trials and tribulations. How much easier would it have been to just be the person who's now driving on a paved highway years later? Learn from those who have been there before. It will be easier to learn from other people's mistakes. You don't have to learn from your own. And lastly, not willing to invest in themselves. when we go to school, we take courses. Now, some of the courses are crap, but we need them to get our degrees or our certificates or whatever. Some subjects in school, maybe you just didn't want to learn. You still had to do them. But you went to school, or if you did go to school, right? If you went to medical school, that was an investment. I know I've got a lot of friends who are now doctors, but they're six figures in debt. Now, sure, they'll be able to pay that off and end up millionaires by the time they retire, assuming, they do the right things long enough consistently, not overspending, etc. But they invested in themselves. I find that a lot of traders, and believe me, I was like this before. I was like, oh, I can just learn this for myself. Right? I'm a smart guy. I can do this. Investing in yourself is probably one of the best things that you can do. When I was earlier on in my trading journey, I thought, yeah, you know what? I don't need to get a mentor. I don't need to take this course. I can just buy a book and read it. Okay. The knowledge helped. I'll never say that, reading a book is a bad thing, especially if you're reading the right things. But if you're not willing to invest in yourself, then you're not doing the best job for yourself. You look at professional athletes, they have coaches. You look at executives, they have coaches. If you want to be able to take yourself from where you are now and to improve, you need to invest in yourself. Now, I'm not saying you should go out and buy my course. I'm not saying that you should go out and hire me as a one-on-one consultant. I do those things. I have those things available. If you're interested, feel free to reach out. But I'm here to tell you that if you're not willing to invest in yourself, whether through time or through tribulation, it's one or the other, it's going to be problematic. It could take you a lot longer than you might think. If I had to start my trading journey all over again, the first thing that I would do is reach out to people who have already been where I was. A fantastic book was written by John Carter. For those of you that don't know who John Carter is, he's the creator of the TTM Squeeze. He made, was it 19, 20, 21 million back in 2022? No, 2021, sorry. I think he made like 19 million from trading. He wrote a book called Mastering the Trade. Okay? I highly recommend that you get it on Audible. Okay? It's absolutely worth every penny you're going to spend on it. And in that book, he talks about how he used to take his account from 10,000 up to 100,000, and then he would blow it up because he would try to go from 100,000 to a million, right? Hey, I went from 10 to 100, 100 to a million is the same thing, right? Percentage-wise. And he talks about how he had coaches and he had mentors, and any person that you talk to who, has had some sort of success in the markets will always tell you, you know what, my mentor taught me this. This person taught me this. This person taught me this. If you want to go about it, watching videos on YouTube and scraping together, this, that, and the other thing, trying to reinvent the wheel, if you will, sure, it's just probably going to take you a little bit longer. But some of the best investments that I've made is when I finally decided that I was going to stop being stingy and coughing up the cash to take that course. Because there have been times where I've thought, you know what? I don't need to pay somebody to teach me. I don't need to take another course. I don't need to do this. I don't need to do that. And guess what? I'd lose 3, 4, 5, 10 times the amount that course would have cost me. And then I sit there thinking, you know what? I could have bought in every course that I wanted. I've actually mentored people who have lost hundreds, thousands, tens of thousands, hundreds of thousands of dollars. And I'm here to tell you that you can shorten your learning curve. Now, I'm not saying you need to hire me. This isn't a shameless plug for myself. If you want to know about how I do my sessions, read the testimonials that people have posted. If that's something that you're interested in. It doesn't have to be me. Find somebody who has what you want and who has been where you are. If you're not willing to invest in yourself, now you don't need 15 screens. You don't need, state of the art computer technology. You don't need all these fancy bells and whistles. But ask yourself this: if you can shorten your learning curve, or if you can take what somebody has taught you and make 5, 10, 50, 100 times what it cost you for that person to teach you, is that not a worthwhile investment? If you don't think that it is, then that's fine. Not everybody has money to spend on education. But ask yourself this: if you have the opportunity to learn from someone and you don't take that opportunity, and then you lose money in the markets, only to then realize down the road, you know what, maybe I need some help. Isn't it just better to think, you know what, let me bite the bullet and get the help that I need now? Too many traders suffer in silence. I was one of them. I'm telling you. You don't have to do that. It doesn't have to be me, but let it be somebody who can help you. Put in the time, invest in yourself. Because I promise you, once you have the skills, those skills will be with you forever. Nobody can take them away. But you have to learn. If you need somebody to help you, to coach you, to guide you, to point you in the right direction, that's what mentors are for. But if you're not willing to invest in yourself, it's just like saying, hey, you know what? I'm running I'm going to bake cupcakes at home. Now, you might need some equipment. Now, if you're not willing to buy that equipment, are you going to be as efficient as you could be? Sure, you might pay somebody hundreds of dollars to put you on the right track. But if it keeps you from losing hundreds of dollars or helps you to make thousands of dollars down the road, is that not worth it? You have to invest in yourself. Whether it's through education, whether it's through mentoring, whatever the case might be, do yourself that favor and invest in yourself. Doesn't have to be me. You don't have to buy my course. You don't have to hire me as a one-on-one consultant. But invest in yourself. If you're not willing to invest in yourself, it's like a business that's not willing to invest into research and development. How many good companies were good companies but just didn't keep up? You guys remember BlackBerry? You guys remember all these other things that no longer exist? Because they didn't keep up. They didn't invest in themselves. Once businesses stop funding research and development, they don't last very long from there. The companies that are always putting money into innovation, into new tech, into new equipment, into good employees, hiring good talent, those are the ones that continue to prosper. So do yourself that favor and invest in yourself. And so that's pretty much it for tonight. Here's some recommended reading, some books that I recommend. Get them on Audible because you can be doing something else while you're listening to these. Atomic Habits, it's not necessarily a trading book, but as a trader, you will see the value in it. Trading in the Zone by Mark Douglas, an absolute must-read. Mastering the Trade by John Carter. Best Loser Wins by Tom Hugard. You definitely want to invest in yourself and get those books. Okay? Listen to them over and over and over again. I have people who tell me, yeah, I listened to Trading in the Zone. Okay, great. How many times? Once. How long ago? 2 years. I listened to Mastering the Trade, like the first few chapters of Mastering the Trade or Trading in the Zone, pretty much on a weekly basis. I've been doing this for like 20 years. So if you think that listening to Trading in the Zone 2 years ago is sufficient, I'm here to tell you it's not. You need to put in the time, you need to put in the effort. Don't be upset by the results you didn't get for the work that you didn't do. Okay? So just to recap, common mistakes: not consistent, making the same mistakes over and over again, oversizing, overtrading, not cutting losses, not letting winners run, revenge trading, system hopping, smoking the hopium, having unrealistic expectations, not being serious enough, knowing when to trade and when not to trade, not learning from those who have already been there, and not willing to invest in themselves. I'm here to tell you that everybody can do it. If I can do it, if others can do it, you can do it as well. But you have to be willing to put in the time and put in the effort and put in the work that's involved. Invest in yourself. Learn from the right people. Because if you're not, then it shows that you're not serious enough about trading. And if you treat it like a hobby, it will pay you like a hobby. But if you treat it like a business, it can pay you like a business. So ask yourself how bad you actually want this and how much it means to you to be successful, to improve your trading results. If you just want to treat this like a hobby, sure. A lot of people treat it like a hobby. But if you want this to be something that can sustain you in the future, where you have unlimited earning potential, then do yourself the favor. Put in the time, put in the effort, invest in yourself, and know that if you do, the reward will be worth it. But if you don't, and if you don't fix these mistakes that you're making, you're probably never going to make it as a trader. So if I can do it, you can do it. Believe in yourself. Just know that it takes time. One step at a time. Think about the next 1,000 trades. But that's it for me. It was a little bit of tough love. If I hurt your feelings, maybe you needed to hear it. But it's something that I'm very serious about, something that I'm passionate about. And helping traders get themselves out of their own way is something that I seem to be pretty good at doing. So take care. If you are interested in, consulting, feel free to reach out and I can see if I can fit you in sometime. If not, find somebody who is, but do yourself that favor. Invest in yourself. Invest that time, invest that energy, invest that money, because it will pay you back multiple times in the future. So that's it for me. Take care, everyone. Have a very blessed night. I wish you all nothing but the best and unlimited profitability in the future. Take care, everyone. Bye for now.